Hello, my name is Benjamin Z. Miller, and I am the Managing Director of Alamo Mortgage Holdings. Today, I'm going to give a brief presentation on how our corporate income bonds might be something worthwhile for you to consider, particularly if you are a accredited investor in the United Kingdom. So I'll go through everything, but first I'm going to do a disclaimer here that the Alamo Mortgage Holding bonds, they're only for accredited investors, and you will be aware that all investments carry some level of risk. This investment is only available to investors who are able to assess their own appetite for risk. Please read the risk statement within the investment memorandum before investing. All right, so here we have something that is so relevant to UK investors, and that is if they are looking at government bonds, maybe you're looking at purchasing gilts, for example, or some other type of bonds. How much does inflation impact the ultimate return? If we look at the long-term history, I'm going to make this a little larger where it's easier to see of the British pound versus the US dollar. What we see here is that in 1945, January 1st, 1945, one British pound would buy $4 American. This was towards the beginning of the end of World War II period and when Bretton Woods was established. And then we see that over time, if we went 5 years forward, one British pound would only buy $2.80 US. And then if we continued going forward in 5-year increments, we see a trend here where the British pound loses value against the dollar, loses value against the dollar, loses value against the dollar. If we look at the 1st of January 2023, one British pound only buys $1.21. So what is going on here with the British pound? And if you have a large percentage of your portfolio in British pounds, there's a big difference between getting an 8% return in British pounds and an 8% return in US dollar, particularly if you're looking at the long-term history. It is something where if the trend of the British pound depreciating against the US dollar persists, a US dollar denominated investment that yields 8% would be more favorable than a similar pound denominated investment yielding the same 8% rate due to the currency appreciation bonus. It's something that's real relevant. So what is it that Alamo does? How do we offer a solution? Well, we purchase US mortgage debt that is denominated in US dollars. And we do this, we are in the business of buying packages of mortgages in the United States. When you buy mortgages, you have to look at a few factors. I'll just briefly discuss them. We are looking at things like the buyer in the United States. Do they have a good job? Are they maybe a government employee? That's a good job. Are they an entrepreneur? That's a bad job. It's not a bad thing being an entrepreneur, but if you're purchasing mortgage debt, you would rather have a borrower who's a government employee because they're very likely to get paid on time and they're very likely to get your payment made on time. What about the collateral? That's something that's important because just because you can purchase a note at a mortgage at a discount from the value of the debt, it doesn't mean that it's a good thing. There's a big difference in first charge, second charge mortgage, how much those are discounted. It's real relevant and you need to know about that. The other thing that drives value is the equity. How much did the buyer put down? Did he put down 10%? Did he put down 20%? In general, if a buyer puts down a larger down payment, they're less likely to default. What about the terms? If you have a choice between buying a 10% note and an 8% note, well, you'd want the 10% note. It's just simply better. How about the history of payments? Is there a long history of the payments being made on time? That's a good thing. What about a new note? Well, you don't know if they're going to make the payments. How about the paperwork? Was it done properly with solicitors putting the deal together and the paperwork, or was it just two guys that were sitting across a table and they got on LegalZoom and created a document, or they got on Microsoft Word and created it. So these things are important, and they're something that if you're buying notes, you need to look at that. So here's an example to give you an idea of how this works. This is a real property in Texas. The sales price of it's $120,000. This is not something we have in our portfolio. I'm just showing it as an example to explain the idea. So imagine that the buyer put down $20,000. This would be a mortgage debt that the seller has chosen to finance of $100,000. The seller would agree to do this because the buyer is not able to get a mortgage from the bank, because the bank doesn't like the buyer and says, well, you've got a bad credit score and you're self-employed and I don't like you. So this is why they can't get a mortgage. But as a result, the seller is able to offer financing, but they want a higher interest rate. So they might offer a 10% rate of interest instead of the lower bank rate of interest. And let's imagine that the mortgage payment's $877.57 per month. Say that for 5 years, the buyer has made the payments to the seller on time, and now the seller wakes up, needs cash, wants cash. And at that point, the seller first calls the buyer and says, hey, can you please go to the bank and get a mortgage? And the buyer says, no, the bank still won't give me a loan. I'm still self-employed and I still have bad credit. So then the seller looks around on the internet, and he starts calling companies like Alamo Mortgage Holdings. And he says, hey, I've got a note that has a balance of $96,574. How about you pay me that and you can make a 10% rate of interest? It's a great deal. And then the conversation starts happening where all of these note buyers virtually will tell the seller, no, we're not going to pay that. We'll only pay this. We'll only pay 60% of the unpaid balance. We'll only pay 80%. And this, let's imagine that the agreed upon purchase price is $83,322. So now the yield on that note is 12%, even though the interest rate remains the same at 10%. But that is something that can be attractive. The investment to value is lower. So it's a very secure asset to buy. Sometimes people ask me, well, why would I buy bonds? There's inflation. I need to go get some cryptocurrency. I need to go get some gold and silver. That's the type of thing that they sometimes say to me. Well, rather than me answering it with my personal opinion, I'm going to talk about a Nobel Prize winning economist. I'm going to talk about his opinion, Harry Markowitz. And if any of you have accounts at Bank of America, at Goldman Sachs, at BlackRock, they just love Harry Markowitz and what he did. They have integrated a lot of his work into the way that they do things, and it's the foundation for so much of the modern portfolio theory that everybody's so excited about. But essentially, when it came to Harry Markowitz's own portfolio, yeah, he didn't use the complicated math that he created. What he did was he would divide half of it into stocks and half of it into bonds. And then once a year, if the stocks had gone up a lot in value, he would sell stocks and he would buy bonds to rebalance its portfolio. Or vice versa, if the stocks had gone down a lot in value, he would sell bonds and he would buy stocks. And that's how he adjusted things. So why do we focus on Texas? Well, Texas is a state that's winning. We've got people moving in from California. We've got people moving in from New York because they like the lower prices and they like the fact that there's less legislation that is job killing. So this is something that Texas is a state that's winning, and we invest into Texas, and that's good for our bondholders. They benefit from that because our bonds are backed by real estate in Texas. It's something that's a good situation. So what are the benefits to you of purchasing the bond? Well, first you can participate in our annual investment program where we help you. You determine what you want for passive income and how many years you have until retirement. And then we work through a plan with you to get you there with an annual investment program where you might invest, for example, 25,000 pounds, 50,000 pounds, 100,000 pounds a year, whatever's comfortable. And that will also get you to where you want to be in the time frame that you want to get there. And we also factor in inflation as a courtesy for you so that you're not surprised when you get there. We offer maximum diversification compared to you going off and trying to be the lone ranger and doing this on your own, having no training in the note business, which is almost certain to result in your failure. It's better to get a steady rate of return where it's much simpler, unless you have a passion for buying mortgage debt, and then you should go through proper training and invest the time that it takes to learn the business. We also don't charge any fees. That's a huge advantage. I get people that brag about their index fund and they say, oh, my index fund, it's a low fee index fund. And they're so proud of their low fee index fund. Well, folks, I would rather pay no fees than low fees. And when you purchase an Alamo Mortgage Holdings bond, you're not paying any fees. So in my mind, no fees is better than low fees, but you have to decide for yourself what's best for you. We have a great team. I'm not going to go through the entire team here. Just go to our website, www.alamomortgageholdings.co.uk. We've got a team with 200 years of experience working for you. You can read all of the details on our team members there, but just check us out, www.alamomortgageholdings.co.uk. So why should you invest in the notes? Well, if you're looking for an above average rate of return, that's the business that Alamo Mortgage Holdings in. How long term is the note? We offer 3 years, 5 years, all the way up to 50 years. Can you put the notes into your SIP, your self-invested personal pension? I see no reason you can't, but you need to ask your provider. You're buying a corporate income bond. Is it a regulated product? No, this is not a regulated product, and that's part of the reason that we can pay so much more. If we had to go through the additional expense of regulation, we would have to reduce the yield, the return that we pay on our bonds to compensate for that expense. Now, at some point, we may go through regulation. We actually may at some point in a year or two decide to go through all of that and then offer it as a regulated product. But right now, our bondholders prefer the higher returns and they feel comfortable with the team that's working with them. Who can invest? Accredited investor, sophisticated investor, charity, trust, institutional investor, come one, come all to Alamo Mortgage Holdings. How's the money protected? I can go through that on a one-on-one call with you. We have a number of mechanisms in place. Can you invest in a company? Yes. How's the tax managed? It's very simple. We pay all the money to you, and then you decide how much tax you should pay with your tax professional. So we don't take any money out for taxes. You get all of it. Are there any limits on how much I can invest? No, there's no limits, and we can support very large placements from institutional investors. Can you get access to the money early? No, you have to be certain when you purchase the bond that this is something that you're not going to need the money. And, this is not like a day trading product where, oh my God, I read some news and I need to sell at a loss because I'm a day trader. Those day traders, they just lose money. They've done studies. The majority of them just lose money. So frankly, it may be a benefit to you that it's in a liquid product. And you also won't have the swings and volatility that you do with publicly traded bonds. So another advantage of Alamo. How can you get more information? Just email me, ben.miller at alamomortgageholdings.co.uk. I hope that helps, and I wish you good luck with your investing.